Then let's get started. Welcome everyone to today's discussion. As you've already heard, it's going to be about real estate. We have Marc and Marc today presenting. I'll hand over to them right after a quick intro from my side, the Disrupt side. So as you know, we do all these digital events. And for those of you who've joined before, we have this WhatsApp group where you can ask questions, and I will then relay these questions to the two speakers. But nowadays, because WhatsApp has a group size limit and we're focused on blockchain, and we also have a Telegram group. So this is where you should join now because the WhatsApp group is full. And post all your questions in there so we can have a little bit of interactivity going on. And the speakers will join these as well, so you can keep asking them questions after the event is over, because we always hope to carry on the conversations beyond the scope of the short events that we do. If the scanning of this QR code does not work for whatever reason, then you find the link also in the email that you received with the Zoom link. Just go back to your emails, click on that, you'll be in the group, and you can start posting your questions. I hope you enjoyed this short event until 10 o'clock. And now I'll hand over to Marc number one for a quick intro. Marc Henniges.
Thank you very much, Jan. It's good to be here. Thanks for having me. Just a few words about myself. I'm a consultant. I've been a consultant for 8 years. I'm a physicist by education, but now I've been working in the decentralized space for a while here at Define. I'm a manager and the product owner for our tokenization platform. And that is also what we'll be talking about today, tokenization and tokenization of real estate. I've been involved in several token sale projects here at Define. I've been doing things like smart contract design and implementation, the token sale, architecture, and so forth. And yeah, I just love the idea of open blockchains, and I'm happy to discuss what's possible with them. And yeah, today I'm here with the other Marc, because we've been doing this project together. We've been supporting them in their token platform, tokenization platform. And now I'm handing over to the other Marc, who is going to start to give you an overview of what they've been doing. And then afterwards, it's going to come back to me, and I will show you a little bit more about our platform and talk a little more about tokenization. So that's it from me for now. You'll see me more later. Now over to Marc.
Thank you, Marc. So to make it easy for every one of you, we just decided to make the presentation with two Marcs. So I'm Marc 2 right now. Yeah. So
go back to Marc
1. I will give you a short introduction about Bloxxter, which we founded last year, and we decided to use, amongst others, Define as one of our partners in developing our platform. And why we did that, I will tell you later. So who's Bloxxter? Bloxxter was founded, as I said, last year. I personally do real estate my entire life. The 4 years before I founded Bloxxter, I was responsible for the real estate portfolio of one of the large insurance groups in Germany. We had kind of 30 billion assets under administration. And at that time, I had a look on different technologies and wanted to find out which technology could be a chance for our business model. And so I got into the distributed ledger space and saw that that technology could be a key to give private investors a chance to invest into institutional real estate. So that was the beginning of Bloxxter. We founded it in 2019. We are nearly 15 people today. And we're sitting in Hamburg, have an office in Berlin, and one in Switzerland, in Zug. So if you have a look at the real estate market for private investors or for retail investors, normally to invest into real estate is complicated, it's inconvenient, it's boring, the products are expensive. Normally they are not very transparent. And if you are not sitting in Germany and you want to invest into German real estate, it's sometimes impossible. So if you're located in Argentina or for example, in China, it's just not possible to invest into real estate in Germany. And as a platform, we connect retail people to institutional asset managers, and these asset managers are normally very good in managing assets and not very good in finding equity, especially not in finding private investors' capital or equity. So that is what we do. We bridge that gap between these asset managers and the retail investors. What we did is we built an online platform for investments into premium assets. What is a premium asset? We want to produce products which are very low in risk, and normally they are not very high yielding, but we believe if a retail investor thinks about real estate, he thinks about security, and that's why we only use premium assets. And a premium asset for us is a core real estate in one of the core cities in the beginning in Germany. We use distributed ledger technology to lower the process cost and to make the piece of the real estate tradable worldwide on a daily basis. So the investment becomes more flexible than buying a flat or buying something, another property. And we combine this idea with institutional cash flow processes. So we have one of the big four auditors as a custodian on all the cash flows. We have an annual valuation of the properties. And what we did is we focused very much on joy of use and simplicity of our platform, that a retail investor can invest into a property without reading like 200 pages of paper. Normally, when I talk to real estate people, they ask me, why do we use blockchain? And if you, for example, Google the advantages of blockchain in the tokenization space, you normally find these 5 ideas. So it's immutability, it's safe, it's automated, it's transparent. But that's, to be honest, not the reason why we use blockchain. For us, blockchain produces just one thing. We have the ability to have a piece of a real estate tradable on a daily basis with very low cost worldwide every day. Because the security of blockchain isn't important at all in the real estate business nowadays, because if I want to cheat someone, I don't do it on the smart contract level. I always can do it on a property level. That's why we, for example, use PwC as a custodian to avoid that could happen. When I say it lowers the process cost, then you can see on the left-hand side how a normal issuance would look like. I don't go into that in detail. If you have questions about that, just contact me. But what we do with blockchain is just we still have the investor and the issuer, and we don't have any longer the bank, we don't have a paying agent, and we don't have a global custodian, which just cut out a lot of middlemen who drive the costs. Compared to other products, we believe that what we produced is, for a retail investor, the best product in terms of low costs. It is really simple to execute. We have the possibility to let the investor decide what kind of product he wants to buy. So what we do is we have a single property, and the investor can decide, I want to invest into that single property, or I don't want. If you have a mutual fund, you can't decide that. If you have a REIT, you can't decide in which property you want to invest. We have a very low minimum investment. We are able to give access to the properties nearly worldwide. The investor can, due to the low minimum investment, could diversify his own portfolio very good, and it's perfect tradable on a daily basis. And we have a pretty high security standard, and that makes from our perspective, the product second to none other real estate investment. How did we start with Bloxxter? So we are a pretty lean startup. Well, on the one hand, we are pretty senior citizen startup, so we are not one of the classical startup. Most of the people here are way in their 40s or 50s, and we only have 2 people who are in their 20s. So it's just well, a senior citizen startup. And we only stuffed the C-level in the beginning. That's why because we believed when we started Bloxxter that time is a critical issue, and we don't want it to stuff an entire team and lose the time we would have needed for that. So the entire operational work was outsourced. Our front end was made together with Strichpunkt, an agency in Stuttgart. Our back end was built by T-Systems. And our tokenization tool was built by Define, and that's what Marc just explains you later on in detail. Nowadays, I would say our estimation that time is critical wasn't correct, because when we started, I said, well, maybe we are 1 or 2 years too late for that business idea. Now I believe that we are at least 2 years too early for that business idea, but we still would do it the same way. And another reason was, if you don't do it on your own, you could guarantee that you get an institutional documentation of all your processes and your platform, which will be helpful if we would need another financing round. Regarding the real estate, I just explained that we focus on core assets with a minimum investment risk. We focus on external institutional asset managers, because that's what I did the last years at Iduna Insurance Group, and I'm totally convinced that institutional asset managers are just better asset managers than the asset managers we see in the retail investment market. The first product we will start next week. We got our BaFin approval earlier this week, and the product the investor could buy is just a fixed interest digital bond with a yearly interest of 3%. It's daily tradable, and you have this very low investment barrier of 500 euro for a first investment. We've got an entry in the land charges register behind the senior loan, so it's pretty secure investment. And well, we have a valuation of the assets which shows they are 100 million euro. The value is 100 million euro, and the investment of the senior loan and Bloxxter investment is below 87 million euros. So we have this risk buffer at the very top of it. The properties we bought are in Leipzig, one of the largest cities in Germany. It's the 8th largest city. It's one of the cities which grow very fast at the moment. They will grow by 16% until 2035. And it's one of the most dynamic cities in the world. And at the moment, the people believe it's kind of a second Berlin. Here you can see one of the properties. It's called the Städtische Kaufhaus. It's office and retail space. It was built in the 15th century, and it was complete renovated in the 90s. The other property is that one. It's Reclam Carré. It was built in the 18th century, also renovated in the 19th. It's office and living space. And as you can see, these buildings are very appealing because of the historical facade, and inside they are pretty modern buildings. And when we talk about core building, it's always about location. You can see on the left-hand side, the red dot, that is the Städtische Kaufhaus. On the right-hand side, it's the Reklamkarree. So we are in the very, very city center of Leipzig. Our financing structure is, or what is the Bloxxter investment? At the moment, we have this 47% bank financing, and the tranche Bloxxter buys is the red one. So it's a junior debt tranche, which which is 87% of the value of the property. And over the next 5 years, the senior financing will be amortized with 3% per year. So this purple colored risk buffer will grow by 44% until 25. And regarding how secure is the interest we pay to the investors, you have the rental income, then you need to deduct the operational expenses, you need to pay the interest and the amortization, and then you have the free cash flow. And the free cash flow is 185% of what we would need to pay the interest for the Bloxxter investors. So that is pretty secure as well. That leads to the fact that if we have the rental income today, we pay the 3% to the investors, and even if we lose 10% in rent or 15% in rent, we will still pay 3% to the investor. And even only if we lose 20% of rental income, we would need to shorten the interest rate for the investor to 2.75%, which shows that it is pretty sure, a pretty secure investment. How probable is that we lose 20% of rent? The properties are rented for, in average, 11 euro at Städtisches Kaufhaus and below 9 euro at the Reklamkarree, and the market rent is way above these rents. So from a market rent perspective, we would need to lose more than 30% to see an effect that leads to a shortening of the payment to the investors. I said that we have state-of-the-art institutional processes to make the cash flow secure. So what happens is the investor buys a digital security that is issued by an SPV. This special purpose vehicle does nothing else than issuing that digital security, taking the money and giving the money to the owner of the property, which is another special purpose vehicle. And all the cash flows between the investor, the token SPV, and the property SPV are monitored by PwC. So we can be sure that the payments are made 100% correct, and we have PwC to double check what we are doing there to give the investor a secure cash flow. Just one last thing from my side. I said we focused on simplicity and joy of use of our platform. So I brought a short video how our investment process works, that you can see how easy it can be to invest into a piece of real estate. And on our platform, it works in less than 25 seconds. So if you go to our website from Monday on, you can see that page. Then you can inform yourself about the property. Of course, it's in German and in English. Then you can decide that you put something in your basket. Then you go to the cash desk. If you're registered, then you just log in. You can change the amount you want to invest. Then you decide how you want to pay. Then you confirm your order, and that's it. That's the way how you could invest into real estate at Bloxxter. So that was it from my side. Thanks for your attention, and I hand over to Marc, number, I don't know, 1 or 2.
Should we do the questions real quick?
Yeah, we could.
Yeah. So one question in the chat was, how do you deal with international jurisdictions? Like, can anyone in the world invest, or what's your stance on this?
Yeah. So during the issuing period, we need to decide. Decide between, well, do we sales in a market which where we need an allowance for, or kind of passive investment. So if someone in Hong Kong sees our page, come on our page, he can invest. We, at the moment, we exclude people from the United States due to regulation reasons, but nearly anybody in the world can invest as long as he is not on a sanctions and embargo list or a politically exposed person.
Okay, so you check for that?
Yeah, for sure. We have a KYC process.
Yeah.
And we do a proper anti-money laundering test, and we do terror sanctions and embargo list check as well.
Nice. And what about companies? Is this exclusively for retail or private persons?
You can invest as a company as well. In our MVP, you can't do it fully digital.
Yeah.
In the MVP, only natural persons can do it fully digital. As a company, you need to contact us, but you can invest as well.
Nice. All right. Yeah,
only because of the KYC test. The KYC test for corporate is just much more complicated, and you can't fully automate it.
Not yet.
Not yet.
Need a little bit of future perspective here. All right. Yeah. Thanks a lot. Then let's continue with Marc Henniges.
Thank you. Thank you. Thank you, Jan. And thank you, Marc. As I said before, and also as Marc mentioned before, we supported Bloxxter, especially in the technical and in the blockchain space with this platform. And I would like to tell you a little more about what we do in this space, and become a little bit more general, also talk about the approach, challenges, and prospects of tokenization as of today. I'm going to start by introducing our firm as well. We are a European consultancy with over 900 consultants. We've been in the market for over 18 years now, and well, our main selling point basically is that we bring a lot of people from STEM subjects, so basically physicists like me or mathematicians and so forth. And the other part is that we have this hands-on mentality, which means we bring people who combine the business analyst and the programmer role, which usually bridges gaps and reduces friction in projects, which our clients really love about us. In the blockchain space, we basically have 3 pillars of expertise that we bring to blockchain projects. The first one is platform solutions. Here, one example project would be that we put the Schuldscheindarlehen on the blockchain with the Erste Group in Vienna. Then the second pillar is a digital asset service pillar, where we do things like custody. For instance, for German exchange, we built parts of the custody solution. And then finally, this is what we're going to be talking about today, our tokenization SDOs pillar. And what all these pillars have in common, as I said before, with our hands-on approach, is that we usually design, build, and ship the entire solution. So you can get everything out of one hand when it comes to all these projects. But now let's jump into the subject. I would like to start, for those people who are new to all this, discussing what actually is a digital asset. We've been talking about how Bloxxter brings tokens and brings real estate on the blockchain, but let's take a step back and talk about what is such a digital asset. And well, the definition is rather simple. It's a property of a distributed ledger system that produces positive economic value and can be owned or controlled. So if you want to get a better grasp on what that actually means, just think of it as an entry in a table of a person who owns a certain amount of something, of some valuable asset. And such a table is in a database that is distributed over several nodes. It's decentralized. It's put in some sort of blockchain network, if you will, and can be owned or controlled. Basically means it's not just a table that shows the current state. It's also some functions in addition to that that help people send their funds to others, such that the entire ledger, the distributed ledger, will be updated afterwards, and Alice can transfer 5 of her assets to Bob. Now, what does that have to do with tokenization? And that is actually the next slide here. Tokenization, I took the definition from BaFin from last year, is the digital representation of an asset value, including contained rights and obligations, and the transferability of that value. So I'm from Frankfurt, so if you think of tokenizing our old opera building over here, then you could put little parts of the old opera building into shares and put it on a distributed ledger. So you would have these people here owning shares of Alte Oper Frankfurt. And so you can state that tokenization in many cases means the creation of a digital asset based on a real world object. So that is what you can think about when we talk about tokenization. Now, of course, and this is often misunderstood, and Marc already talked about that, this doesn't really mean that you own a piece of Alte Oper. You cannot go to the building, take out a brick and say, I own a token, this is my brick of Alte Oper Frankfurt. It works a little differently. And I've put a very simplified setup, which is a little more technical than the one Marc just showed, to highlight some important aspects of a simplified tokenization project. So Marc already talked about the Bloxxter platform, and they have 2 SPVs. I've summarized them into one here. So these SPVs, they own the real estate object, and they receive the cash flows first. They also issue the token to investors who will invest. They will send money to Bloxxter and receive tokens. So they will be holding these tokens. Their names will be in this table on the ledger, and they will then receive cash flows based on this token. Now, this token is represented as a smart contract on an open blockchain, in this case here for Bloxxter Ethereum. And this is basically the setup. And the investors can now directly interact also. I didn't put the arrow here, but the investors can directly interact with this smart contract here and do transfers of the asset. And now what is really simple in such a setup is, since this is on a distributed ledger and anyone has access to the information put on the distributed ledger, put onto Ethereum, other third parties like exchanges can easily connect to such smart contracts, such that for investors, it will be easier to trade on exchanges, or you can also think of other platforms that make sense to connect to a smart contract. On the next slide, I want to talk a little bit more about the benefits that come from this. While this looks like a lot, it's actually a rather simple view on things. The left-hand side over here shows what a setup of like this would look like today without blockchain. So this is classic web, how we know it without blockchains. And you have these 3 layers. You have the service layer, which basically stands for the interaction of the investors with the issuance platform. And then there's a business logic and data layer. And in today's world, this would all be stored in a black box in the back end that you don't see. And if other parties like exchanges want to connect to this, they would have to use an API, some sort of Bloxxter API, it would be in this case, but they would not have any idea if the processes in here are safe and sound, what is going on in here, and they wouldn't see the ledger. So this would be all locked away. Now today with Web3, so in the distributed world, the backend becomes much smaller. A lot fewer logic is stored away in a black box. And a lot more business logic can be put in so-called smart contracts. These are programs running on the blockchain, and the data is then finally stored in the blockchain in this distributed ledger. So the smart contract, while a part of the distributed ledger, contains parts of the business logic, which makes it easy for exchanges to directly connect to such smart contracts, but also for other investors who want to access the smart contract directly, they can do so using their own wallet software or hardware wallets. So basically, they can interact with their assets in the smart contract directly. And there are some advantages that come from this right away. First of all, you have very standardized interfaces. These are all things that are highly standardized already now. It's a very young market, but already now we have high standardization in these smart contracts. There's built-in security and high transparency, as I mentioned before, because of this public open blockchain that everybody can access. And you break up data silos and data logic, which will help a lot. And I will come to that on the next slide, why this is beneficial. But it can also already help to see that with broken up silos, you get a lot of those smaller backends, and that is highly beneficial in terms of efficiency. Now, when we think of the key benefits for us as investors or for people like Marc who are issuers, there are quite a few, and I'm just quickly going over them here. You have fewer reconciliation processes because people can directly access, the ledger can directly access the smart contract if you want to. For instance, business partners can access the smart contract and see what the state is in there, which also means that you have increased trust between them. As Marc already pointed out, because of fewer intermediaries, you have lower overall costs or even lower fees. And you get access to new groups of investors. So maybe many of you are like me and you don't have 2 million euros lying around to buy a house in a larger city, but you still want to participate in that market. So what you can do is you can really just take some of your money and invest it in a small portion and participate in the market by buying tokens. And this means, well, on the other hand, for people like Marc, it means that he gets access to investors who don't want to invest large amounts, but who want to invest smaller amounts. So he will get more liquidity from the market. I basically talked about the smaller investment tickets already to talk about this. Higher asset liquidity refers to the fact that you can have a secondary market that is very active. So if you hold assets, you hold some tokens, and now you suddenly need the cash, you can sell it 24/7 on the secondary market. You get access to new kind of asset classes. You can think of tokens that do more than just represent something. You can think of tokens representing an asset that wasn't possible to invest in before. And because of the broken up silos, you get more competing products because a lot of data logic now lies in a very public space, and you will be able to leverage that for other projects. So many projects will be looking into, for instance, the smart contract that Bloxxter has used, and they might use that as well. And now this may not be good for issuers, but it's good for investors because competing products means you get a lower price for the same product, and they have to be very efficient at other places in their processes. So that was the part about tokenization. Why is it beneficial? And for what technical reasons is it beneficial? I would like to talk about something that happened rather recently. That was the crypto commercial paper from the blockchain strategy was mentioned in a recent draft bill. And with this slide, I would just briefly like to talk about some key aspects and basically show you what we think the future digital asset market structure will look like with these electronic securities. So you will still have the issuer and the investor. The investor will still have to go through a know your customer process, and the issuer will have assets issued and invested in, and dividends being paid out for somehow. But the difference is this asset will now be, or can now be, a so-called crypto commercial paper or Kryptowertpapier, which is a subform to the electronic commercial paper, according to this blockchain strategy of our federal government here in Germany. And what this means is that you have certain changes that are rather revolutionary. I'm going to start with this one. The registration is now done on an electronic securities register. So there is no paper form necessary anymore. And this is very new and this is very exciting because this really opens the market for people who don't want to put everything in paper and to make processes way more efficient. So that is the most important revolutionary part here, that you have this electronic securities register. The scope for now, however, is first of all just bearer bonds. They say more later, like for instance, to electronic shares and electronic investment fund shares. They say they will add later. For now, they will start with bearer bonds because it's a lot simpler as a product itself. In terms of technology, the draft bill says, well, public blockchains are possible, but public blockchains like Ethereum with a proof of work concept, they have the problem of finality. So if you write something to the ledger, if more than 50% of the network decide to roll back a block of the blockchain, the transaction you put into that block could be lost. And this is something that shouldn't happen. So maybe some blockchains in the future might disqualify, or other solutions will have to be found. And finally, the registers, as I already said, electronic securities registers, they are split up into two possibilities. First of all, a central one where you need a central securities depository, as today basically, or it can be a crypto register. And then any third party which would have to be regulated according to the German Banking Act, but still you can use a crypto register. So it is open for blockchains to hold this register. And this is what you see here. You have the registrar who has to be licensed, and then the crypto securities register or a token smart contract, however it will be mapped. Now, after this, as promised, I'm going to go into a tokenization platform. So before I close with the next two slides, I want to just quickly show you what such a setup looks like. As Marc mentioned already, there are several components involved. Here again, you have the issuer who wants to put something on a smart contract in the blockchain and would use the sort of decentralized application, as Marc pointed out, our minting tool, which uses information from a central backend and writes it into the blockchain by connecting to a blockchain node. You also have the other side, we would call it the off-chain side, where you have another front end to steer what is going on with your token sale, where investors directly interact with the front end, and Marc just showed that can be done in, what was it, less than 25 seconds. So that would be the front end you just saw. This front end is then for the issuer to do some steering here. And such a tokenization platform needs to have some key features. And that's also where some challenges come from. For instance, investors will make mistakes. You will have to deal with that. Investors register and they want to buy more tokens than they do or less. And all this goes into the central backend. And at some point it goes to the blockchain, and what you write on the blockchain is written, period. So you want to be sure that what you do is correct and that you only mint tokens for investors who really wanted to invest this very amount. Then what you want to do is you don't want to do everything yourself. If you come with a platform like this one, then you want to make sure you have reliable partners. And there we're very grateful that we do have very good partners to do a token sale. For instance, Innovo Cloud to host the infrastructure, Frankfurt School here in Frankfurt for research, CryptoTax, the German bank we have, Upvest for custody, or Linden Partners for legal. So with all these partners, we can work together very well. And this is a key aspect because no one can do all these parts alone, especially legal and technical. All the private key management and the cash flows that are in this platform need to be very secure. And also the minting process, as Marc pointed out over here, has to be very stable and fault tolerant. Well, because you really interact with a blockchain, you have to manage your private key for that. So that is where a lot of thinking goes in how to design that properly. And finally, these smart contracts need to be designed very carefully. As I said, there's a lot of standardization already, but many of our clients always want a lot of customization as well. So what usually happens is we take the part that is standard and we add some additional features. And you want to do a lot of auditing of that and be very sure, write lots of test cases. There are updatable smart contracts, but all this is still very, very young. So you want to stick to what's been working for years And so you usually go with a static smart contract, and hence you cannot change that afterwards. So while talking about this platform, I always said we, so that already implied that we have such a platform, as Marc already pointed out. They've been especially using the minting tool part. What I'm showing you here is our other dashboards. We have this dashboard, this front end for the issuer, where they can see how the sale goes, how many people have invested. And we have a front end for the investor, where they can select the currency and say how much they want to buy. And our platform, of course, comes also with acceptance of euro, but also crypto payments. We have this stable, fault tolerant, and easy to operate minting process, which also has a couple aspects in there for fraud prevention. So you don't want one of your employees as an issuer to run off with a private key, and then you're unable to mint, and this person can live somewhere in the sun with lots of valuable tokens. We design our smart contracts with people who've been doing that for a while. And we, as I said, use reliable service providers and partners, which provide other built-in functionality. Now, this is my last slide before I close. I just want to briefly mention why it is a good idea to start now. So if you are an owner of real estate, if you are an issuer and you think of doing something in this space, now is a good time to start. First of all, because the regulatory landscape is evolving. You get more clarity every day. We have new regulation proposals. There's MiCA, the markets in crypto assets from the EU. There's the electronic commercial paper, as I just mentioned. So with all this, you have a lot of movements in this space. You get an early mover advantage if you start early. So get a head start might be a good idea if you have this in mind to get started now. Because we already see that now it's not only smaller startups that enter the market, more and more larger financial institutions are also building products based on tokenization. So this is already also a good reason why you want to start now and get into the market. As I said, there's space for new service offerings by regulated players. And finally, there are these existing partners who have experience in all this, and one of them is us. We have a lot of experience in tokenization. So if you feel like you want to do something in this space, I'm very happy if you reach out to me or to us at Define in general. Happy to help or with questions or with projects in the tokenization space. And now I'm looking forward to your questions and I'm happy to answer them as good as I can. Thank you very much for listening, and now back to you, Jan.
Yeah, thanks a lot. So we have quite a few questions. What similar projects are you working on, Marc, from Define? Like you said, you have this platform. What else is running on there?
Mm-hmm. So the platform itself is very modular. So it's not like we put this platform out there and people just run their SDO with the platform as it is. What usually happens is, like in the Bloxxter case, a client goes and says, these are the components I want to use, and then they use that. Or for other projects as well, people just want the smart contract only, or they want maybe a front end only. So it's not like the platform itself is running as a complete platform in many different projects. It's more like we have this platform, we have all the components, we know that they work together. And then clients come along and they do some cherry picking here and there because they sometimes already have other partners. So it's not like I can tell you about projects that are running on the entire platform, but we do have clients that are interested in parts of it. And yeah, most of them are in early phases, earlier than Bloxxter, or some are all the way through. It was some ICOs in the past that we did 2 years ago. So there were some projects before, but as I said, mostly the platform is complete just because we want to make sure that we have everything that works and we know that everything works together and how. But what usually happens is that our clients use parts of it.
Okay, nice. Yeah, for Marc from Bloxxter, what guarantees do you give out to investors?
So the guarantee the investor has is that he has this entry in the land registry and a pledge of all the cash flows. So you have the guarantee that every single euro that the tenant of the property pays into the SPV goes like the cash flow that I showed. So you pay the operational expenses, then interest and amortization, and every additional euro firstly goes to the investors. So you have the guarantee of 80 different tenants who pay their rent.
Okay. And maybe a follow-up question to that: how easily can you get in and out of these projects? Because 500 is quite a low amount for real estate. Like how liquid is that market? Where can I sell the token?
Yeah, well, we developed two native apps. If you download our app, you have kind of a button where you can say, well, I want to sell my piece of the property. And in the MVP, it's not fully automized, as we don't have a legal exchange who's allowed to do this exchange function. So that's why we buy it back. So it takes you between 2 hours and a day to sell it again. But well, yeah, it's just a day if you compare to try to sell a piece of real estate. Otherwise, well, it's pretty quick. But the goal is to make it in a logical second.
Then a question for Marc from Define. Do you see the challenges more on the tech or more on the marketing side? And do you help with both or just the tech?
That is a very good question because it's difficult on all sides. It's not just the marketing, it's not just the technical, it's not just the legal. Yeah, I would say maybe the most challenging part is user friendliness, is user onboarding. And it now, and in the case of Bloxxter, as you can see, when you go to the front end and you want to buy tokens, it is very, very simple because the blockchain part is very far in the background, right? So in this process, it fits very well into today's time. As Marc already said, you might be 2 years too early for a decentralized market because people are still adjusting. So the most challenging part, I would say, is building a process that is user friendly enough to don't lose or not to lose investors during the onboarding phase. Because if you want to make them get a wallet for the Ethereum blockchain, then they need Ether to create transactions on this blockchain, and that's where you lose a lot of people. So that has to be simpler in the future. That we have to get to a point where you take users by the hand and get them there. But then after that, to have a successful project, the users are most important. But after that, also, of course, all the new tech is very challenging. Most of these things, and I can talk as someone who has implemented smart contracts, most of the libraries you use, so for the technical people out there, are very, very young. So you run a command twice in your console and it returns two different results. So you really have to be sure to know what you're doing, be in a clean environment. So all these things are very challenging. So the technical side is too, but that comes after the successful onboarding of a user, which is the most important part to have a successful project in any field, not just tokenization and blockchain. And I think Bloxxter did that very well by not focusing too much on blockchain, using the advantages you get from blockchain, but also abstracting that away for investors such that they have a very good user experience on the front end side.
Maybe I can add something.
Yes.
There's one huge difference between the marketing side and the technological side. If you talk to people like Define and they tell you, well, I know how we solve your technical issues, then you can be sure that your technical issues will be solved. But if you look at the marketing side and you go to a marketing agency and they talk to you and say, well, that's not a problem. We designed the perfect funnel, and that's all true, but they are used to sell whatever, shower gel or something like that. And they are not used to sell a financial product. And if you want to sell a financial product online, the game definitely changes. So you need to be very experienced how you sell a financial product online and offline to get a good result. And only by using the perfect funnel and the right affiliate strategy and the best Google AdWords strategy won't sell a euro online. So the problem is you can fix all your technological issues with services who do a good job, and you can't do it on a sales side. There you really need to understand what you're doing on yourself.
Mm-hmm. And that entails having a very good branding that kind of convinces people to come to the website in the first place.
Well, the most expensive thing is bringing people on your website. So if you're doing so, it is necessary that you don't lose them. That's why we focus on simplicity and things like that. But even bringing the people to your website, you need to know how that works. So it's just a mixture of very different things. You need to have an idea how buy people financial product offline and stuff like that. Yeah.
Nice. All right, maybe a quick note to the attendees. We will post this, the recording of this event to YouTube. So there you can see, if you're interested in some of the slides, you can check back again what was said and what the slides are. And if you have any more questions, do post them in the chats now, last chance basically. And yeah, another question for maybe both Marcs. Where do you see the future going? Like this is what we have today basically. What do you see in like 3 and 5 years being tokenized, and what will the platforms be like?
I'm going to start, and maybe then Marc, you can add to that. Because, well, I'm not just looking at real estate, we're looking at lots of other things being tokenized, because there are basically no limits to what you can tokenize. I've read crazy things. People have been tokenizing their working contracts, and you could invest in their working contracts. You can invest in basically anything that can be represented as a digital asset. The problem is legislation. And we see a lot of things happening with that respect, because what is always the problem is that if you want to represent something digitally and you have a parallel paper process still in place that needs to be there legally, then you're going to have problems putting all that stuff on the blockchain. But we see, as I said before, with this electronic commercial paper, a movement away from that. So it could be real shares, as today you can't put that directly on the blockchain, but we could see real shares on the blockchain and all kinds of other financial instruments as they are today. That is one exciting part. The other exciting part is that you can see totally new products. Like, for instance, you can buy a token that represents ownership, like a share of a football club, maybe. So maybe you're a football fan and you want to invest in your favorite football club, and this the tokens that you own will then also directly technically give you the right to vote on jersey color or get a free sausage when you visit the stadium or so forth. And all these things can be put on the platform and also be traded on a secondary market. So there's virtually no limit to what you can put on the blockchain. And I think that we're going to be seeing more products to be put on the blockchain because of all the advantages that this decentralized technology brings you. And apart from tokenization, there's a lot more like digital identity and so forth, but I'm not going to talk about all that now.
Maybe at another event.
Yes.
From a real estate perspective, we think about building kind of a real blockchain ecosystem. So in 5 years from now on, it might be normal to tell your tenants, don't pay your rent to a banking account, just pay it to the smart contract. And the smart contract just takes the rent and gives it in the same second to all the investors. So I can fully automate the entire distribution of every cash flow, for example, and all the reporting and stuff like that. So I think that you can use that technology and make this kind of investment so much easier But if I tell my tenants today, well, pay rent to a smart contract, they normally would say, to what? So that's a pretty too early right now.
Yeah, that's probably true. Yeah, another question for you, Marc from Bloxxter. What will you do if everyone wants to sell their shares?
Yeah, well, we will just buy it back. That's a theoretical issue, but we don't have a real problem with it, because today we have all these shares, and we wouldn't have bought the property if we wouldn't have been convinced that it is a good property. The question even could be, what would we do if we don't sell any share? We still have all of them. So yeah, if all the people want to sell them on the same day, which never will happen in reality, we would buy them back. I think the main advantage of Bloxxter is that, well, our main shareholder has enough liquidity to do so. So we are able to do it, and we are willing to do it.
Nice. All right. Now that's it from the question. Maybe the last one I found was some people were asking for both of your contact details. Maybe you can show them again on the screen real quick, or say how you are most easily contacted. LinkedIn, email, what do you prefer?
Yeah, so if you remember my name, just go to LinkedIn and connect with me. I'm very quick with a reply there. I'm always happy to get new contacts, especially if they're interested in talking about blockchain.
Yeah.
But I can also, yeah, let's do that first. So now do your screenshot of Marc's screen.
Yeah.
And
are you also active on LinkedIn, Marc, or do you just accept email? You're on mute.
I think that was to you, Marc.
Yeah, I'm on LinkedIn as well. So you can do both of it. Send me a message on LinkedIn or send the email to marc@bloxxter.com.
Wonderful. All right. So Marc Henniges, maybe show your email again for those interested.
Will do on it. There you go. It's very canonical. If you know my name and my firm, it's very easy.
Yeah. Wonderful. All right. Then I thank you for being part of this event today. Also to the participants, thanks for joining in and asking all these questions. Yeah, keep the discussion going in the chats. Write the speakers directly if you have a specific question to one of them. And I hope to see you.
I'm not in the WhatsApp group, by the way. I'm not in the WhatsApp group. It was already full.
Yeah.
So if you want to reach out to me, please use another channel.
Join Telegram though. Then
yeah, I will.
One is, I think 25,000 people maximum. So way to go.
Okay, maybe we'll reach that today.
All right. Have a great Friday and enjoy your weekends, everyone.
Same to you. Thanks for organizing this, Jan.
Bye.
Same for you.
Bye.
Bye.